Hey guys, welcome back to the Workplace and Apprenticeship 10 videos. In this video, we're going to look at Lesson 4 from Chapter 2, which is all about deductions and net pay. So your deductions are amounts of money taken off of your gross pay, which is your pay without deductions. So deductions include your income tax, union dues, disability insurance, employment insurance, pension plans, and health or other kinds of benefits. So your income tax is paid on your taxable income, which is essentially your gross pay minus any before tax deductions. And some of those before tax deductions might include your union dues and some pension contributions. And on each of your paychecks, what you should find listed would be your gross pay, all of your deductions, and then your net pay, which is essentially it's what you take home at the end of the day. So it's the money that actually gets deposited into your bank account. So let's look at our example number 2 from our notes. So what we're going to do here is we're going to determine this person's taxable income. And what we've been given here is somebody's pay stub. So with your pay stub, it is basically just an overall summary of everything that's been added or deducted from your paycheck. So usually what we're given here is there's some general information about the employee, what their pay date was. So if it was within a 2-week time span, 1 week, it'll give you all that information. It also gives you a little bit of a summary here. It also tells you your hours and your earnings, so how much you worked compared to, I guess, the amount, I guess your regular wage. You have your before tax deductions, you have your total tax deductions, and then just an overall summary. Okay. So to determine the person's taxable income, we're looking here at this before tax deductions bracket here. Okay. So when we're calculating somebody's taxable income, essentially all we're doing is we're going to take their gross pay and subtract each of those before tax deductions. So here what we can say is that the person's gross earnings was $500, and then each of those deductions was $1.38 for union dues and $43 for pension. So once again, we're going to take that gross earnings and subtract each of those before tax deductions. So your taxable income is equal to your gross pay minus your before tax deductions. So this employee, as we said, they made $500 for that paycheck. That was their gross pay. Then we're going to subtract each of those before tax deductions. So our first one here, we have $1.38 for union dues. Then we can also subtract $43 for that pension. You can put that into your calculator, and then what you should find is that the taxable income is $455.62. And with this one here, it's not much of a word problem, but just so we get some good practice with it, we will write a sentence here. So we could say, this person's taxable income is $455.62. So we are now all done this question, but before I finish the video here, I just want to quickly talk about the purpose of this taxable income. So the purpose of this taxable income is we will use this dollar amount right here to calculate all of our taxes. So the stuff that is our that we apply to our taxable income. So you take this dollar amount that we just calculated and use that to find our federal, provincial taxes, your Canadian pension plan, and your EI. So anything that's within your taxes little category here is usually based on some sort of percentage of your taxable income. Say, for example, your federal tax is usually about 5%, and so you'd be finding 5% of that taxable income, so it would not be off of your gross pay. So anything from this taxes category, you use your taxable income. That's all that I had to make for that little note there. So thank you guys so much for watching. If you guys have any questions, just come see me in class or text me on Remind 101.